Well, hello and good afternoon. Welcome to this week's edition of the GoNoGo Charts show. I'm on my own this week and looking forward to talking some markets with everybody. Don't forget, if you're checking us out on YouTube, check out our channel, GoNoGo Charts. Check out StockCharts channel. Also check out the on-demand app for StockCharts, which is great. You can get all of the great content from StockCharts anytime, any place. So we're going to go through the markets. What a week since we saw you last. The weekend was remarkable in terms of what was happening with the banks. And so we'll talk a little bit about banks, of course, later on, but we'll go through our normal top-down approach to get a sense of where the trends are, what's happening, and hopefully we all find it helpful. So we're looking here, of course, at our asset map, and you can see that we have stayed with the trends that we had last week. We're getting a nice bounce today in equities, but we are in a no-go trend. That's the top panel here. The middle panel, Treasury bond prices, showing amber go fish bars. Remember, with the colors, we take a blend of technical indicators behind the scenes and color the trend based on trend strength. So when we're looking at the maps like this, we're not looking at price at all. We're just applying the approach to color the panel based on trend. So quickly we can see we're in a no-go in equities. We are in an uncertain amber go fish period on Treasury bond prices, which of course move inverse to yields. We'll check out some Treasury rates in a minute. And commodities are in a strong no-go. You can see that with the purple bars and the dollar still managing to hang on and thrive in its go trend. So let's take a look now at some of those macro factors, as well as the S&P itself, the US domestic index, to see exactly where we are at and what's happening. Well, this is the daily chart of the SPY. And you can see that we entered the no-go, we quickly rallied and retested before rolling back over. And these last sort of week or so has shown strong purple bars up until today, where we've rallied to the tune of almost 1.75%. So a strong day today. Now, what's interesting, you'll see, is that we have tested the zero line a couple of times. Now, if you know us and you know GoNoGo Charts, we know that the zero line should hold as support or resistance when a trend is strong. So in the case of this no-go being in place, as prices correct against the trend and the oscillator rises to test the zero line, this zero line should now be resistance if the no-go trend is healthy. So we're going to watch very closely here to see if the oscillator gets turned away by the zero line again. And if it does, then that tells us pretty clearly that momentum is remaining in the direction of the trend. So we're getting negative momentum, of course, if we get rejected by the zero line while the no-go trend is in place. So we'd expect further downside pressure if that happens. If it breaks above zero into positive territory, then that would be a concern for the no-go and some encouragement to people that are hoping we can come out of this and enter a new go trend again. Let's back this out and take a look at it on a weekly time frame. Well, this is important because we, of course, like to do multi-time frame analysis, and what we're seeing on a weekly time frame is quite telling. Now, remember, the bar will continue to update until it closes. So it being about Thursday lunchtime here, we still have the rest of the day, and we have tomorrow as well. And if price was to close a little bit lower, this go bar would probably end up not being aqua, but probably still being amber, because we were amber yesterday. But if we were to close at this level, this would be the first go bar on the weekly chart that we've seen for quite some time. And you can see how that's coming as a slightly higher low. You can see that that's coming as the oscillator holds the zero line as support on the weekly time frame. Now we are right back at zero. We're riding the zero line for several bars, and you can see that the grid of the go-no-go squeeze is starting to form. So all that being said, we're definitely going to watch where we close tomorrow to see if this is the first of a new weekly go bar or if it will remain in uncertain territory. That'll really help us understand what's happening on the daily time frame. So let's move on to something like Treasury rates. We talked about how Treasury bond prices were painting some neutral bars. This is Treasury rates, the 10-year Treasury yield. And you can see that we've fallen quickly out of this go trend that was starting to look relatively strong. We moved down very quickly. We've moved below the zero line on the oscillator, and we are in pink no-go bars. Now, very obviously, because of the size of the price panel and that we don't have too much on it, we can see that we found some support here at levels that had been support in the past. So we're going to look to see what happens here. This no-go trend is new. The oscillator is below the zero line. So that could, of course, help equity prices, especially in the short term, if that holds as a no-go trend. Let's look at the dollar. We talked about the dollar on that asset map as being in a go trend, and it certainly is. We've seen a go trend identified here back in the middle of February. It's made higher highs. We corrected against it, but we've gapped now back higher and in strong blue bars again. The oscillator quickly recovered the zero line. So this dip below zero, of course, a threat to the go trend, but we are back at zero. We'll watch to see if we can stay above the zero line or if we fall back below into negative territory. So at the moment, in a go trend, but facing some struggles to move higher. That's the UUP, the ETF, of course, that we use to represent the dollar. We can go from here to look at gold. Gold also interesting at the moment. I posted a short piece of research about gold. Is it gold's time again, given the volatility in the stock markets, given the uncertainty surrounding the banking sector and things that were happening over the last week? We saw this chart as the oscillator broke above zero on heavy volume. That was the first sign that perhaps this no-go correction was done. Then we saw consecutive gaps higher back into the gap, area of the gap from early February. Now, we know that gaps tend to fill, so we were watching to see as price came up to the top of the gap, struggled a little bit, but then seems to be creeping higher and is now painting an aqua go bar. So is gold acting a little bit as a flight to safety again, as it was towards the end of last year? We'll have to see how it plays out. Today's strength in equities, is that something significant or perhaps just a reaction to the last few days of downward moves? We'll have to see. But gold in a weak go trend at or above what could have been resistance, an oscillator in positive territory on heavy volume. Let's take a look at oil as well. We've been looking at the weekly chart of oil because we are seeing quite a lot of choppiness on the daily. Now, the weekly chart just continues to do what it's been doing. It's been moving slowly lower in this no-go trend. And we've talked at length over the last several weeks about the strong resistance at the zero line as prices creep lower. We've seen this downward sloping trend line. We saw oscillator divergence as the oscillator lows got higher, but we have been rejected again by the zero line out of a go-no-go squeeze, and we're now in negative territory again. So not much to report here other than to say that the trend remains in place. We're now towards the lower end of this downward sloping trend channel. So we're going to watch to see if we can break lower or if we stay moving lower slowly within that trend. So that's some of the macro factors that are, of course, going to have an effect on the equity markets. What we'll do now is go underneath the S&P and try to take a look at the breakdown of the sectors, as we always do. Let me pull up the GoNoGo Sector RelMap. And this is an interesting chart. We've been looking at this and spotting some changes over the past few weeks. And what we were noticing was that the growth sectors were starting to show some uncertainty and starting to struggle relative to the base index. Now, the outlier here, obviously, is the tech sector continues to be in a relative go trend and has strengthened again over the last couple of days. So technology remains strong. We're seeing a lot of breakup in the map. This is interesting. Times of uncertainty, times of volatility. We had a clear rotation out of these defensive sectors into tech, communications, and discretionary, into the growth sectors for a few months. And then now we're seeing a real breakup here as we're getting some uncertainty in industrials. We're getting a return to strength on a relative basis, weak though it may be, in staples and utilities. We're also seeing communications struggle to maintain going into amber bars. And of course, discretionary has been in a relatively weak no-go to the base index, but now painting an amber bar. So a lot of uncertainty, a lot of breakup in the sector map. But you can see here that it is technology indeed that remains in a relatively strong go trend. So we'll come back to technology because I want to pull out a single security stock just to show how you can find strength even in these volatile times. But let's look at what, of course, has been the main focus of the week and after the weekend, and that's what's been happening in the financial sector with the regional banks and with, of course, Silicon Valley Bank, where I believe, if I'm not wrong, there was $41 billion drawn on Thursday of last week. Really quite remarkable, and the biggest failing of a bank in of course, since the financial collapse. So let's take a quick look. We'll look first at the KRE. KRE is the regional banking ETF, and what we want to note is how you can sort of manage risk in these times. Like, we know that we can bear choppiness, we can bear small losses. We are told to learn to love our losses. We have the 4 types of trades: the big win, the big loss, the small win, and the small loss. Now, we can handle all of those except for the big loss. So when you have a disciplined approach and a weight of the evidence approach, what you hope to avoid is the big loss. And you can see how we were getting a go trend that didn't really last and led to sort of a break-even trade, even maybe a small loss, and then a no-go trend that didn't really last, and then a go trend that didn't really last. But if you are following a disciplined process, you would not be long during no-go periods. And then that leads us to the right side of that chart, and you can see how when we broke out of this max squeeze back into negative territory, that's our first warning sign. And then we get the no-go bars happening on March 2nd. And so this big collapse that we saw in regional banks was already somewhat identified at the no-go starting a couple of weeks earlier. Now, to participate in something like that, we were looking earlier in the week at Goldman Sachs. Goldman Sachs was trading through this area of support when we were experiencing all of the news about the banking industry. So looking at a big bank to see how it was holding up seemed to be worth looking at. And you can see how we have had some similar go trends that didn't amount to much, a no-go trend and another go trend. But then, interestingly, on this break below support, we are on a no-go trend, and we had already retests of the zero line. So this oscillator breaking below zero here, retesting, falling away, rallying, retesting, and falling away again as the price then broke through this level of support. And so we are looking now at this move lower, and we're going to be targeting the lows here from earlier in the chart, which line up with a measured move from the top of this horizontal pattern. That would be a sensible target for something like Goldman Sachs here. And if you look at it on a weekly basis, you can see that we are again falling out of a no-go, painting an amber goldfish bar, but importantly, breaking out of a max go-no-go squeeze into negative territory. So in the weekly chart, as well as the daily, we are starting to see some serious weakness. And on the weekly chart, you can see the sensible target which we were talking about on the daily here, and then of course here as areas of natural support. So looking at all of that together, you can see that we had some weakness around the what was happening with the banks, but there can still be strength found. So I want to just pull our eyes back to the sector RelMap, and you can see that again it was the tech sector in the top panel that is showing relative outperformance with a strong go at the end of the chart. It's been in a go trend since the end of January and still performing well as the market dealt with this volatility and this panic really based on what was happening elsewhere. So within that sector, we can go to breaking down the subgroups to get a sense of where within that sector we are seeing strength. Remember, it's about finding opportunities to differentiate yourself from the rest of the market or from a benchmark. So Tyler likes to say, fishing where the fish are. If you can be invested in the sector that is performing better than the rest of the market, that's step one. If you can be in a sub-industry group that's performing better than the sector itself, then you're further finding outperformance as you go deeper into the process. So the one that we've talked about before, I think on the show already, is that semiconductors have been in a strong relative go trend to the sector itself for a couple of months, and that remains the case. Semiconductors in a relative go trend to the tech sector, which remember is in a strong relative go trend to the S&P itself. So of course you start digging around in the sector, you start digging around deeper in the sub-industry, and then you can hopefully find some opportunities at a single security level. So one of the tickers that we pulled out in our daily research pieces was NVIDIA. And this was an interesting chart because we had seen the go trend be identified. We had corrected against that go trend, which is of course so typical, but found support as momentum remained on the side of the go trend by staying positive and finding support at the zero level. And then we mostly moved sideways, struggling with this sort of overhead supply at these levels, moving sideways as it tried to stay above the support from the top of the gap. And then what we will have seen then is another test of zero and a bounce into positive territory. So here we are getting excited about trend continuation at this point. Go trend is in place. We're seeing momentum remain on the side of the go trend. And what we can say here quite confidently is that a trend is in place and momentum has resurged or is resurgent in the direction of the trend. By finding that support at zero and bouncing back into positive territory, momentum is confirming the trend in price. And of course, then today, a couple of bars later, we're seeing a nice move in NVIDIA. So just sort of to show that even when markets are volatile, there is strength to be found in relative work and looking at which areas of the market are outperforming on a relative basis. So I'd like to thank everybody for watching, and hopefully there's some value in these charts. If you have any questions, of course, feel free to reach out to us at any time. Hopefully you are following along on StockCharts. As I said, check out the YouTube channels as well as the on-demand app, which is quite brilliant. And we'll see you soon at some speaking engagements we've got coming up, or if not, at the very least on Thursday afternoons on the GoNoGo show. Thank you very much, everybody, and have a wonderful rest of the week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.